Hey traders, Kenya Horton here, and in this video, I'm going to do a quick analysis of AUD USD and just want to point out why the KiSS strategy is so amazing, but also give you some helpful tips that you want to keep in mind. So this morning during the New York session, we called a short on AUD USD, and I want to show you exactly what I was looking at and why I took that trade. So as you can see, according to the manual, now there's an entire KiSS playlist on our YouTube. If you go to our playlist area, you'll see the entire YouTube playlist on KiSS. And then we like to do these analysis videos. So you'll see here that I'm on a daily, but if you look in the training manual, if you've purchased the training manual, you'll know that we do a lot of our analysis on the 1 and 4 hour. I like to start on the daily because I also intraday trade, and you can use KiSS as a scalping, which means when we scalp, we hold trades for just a few minutes. We're not in it for long term, whereas intraday, we might be in that trade for about an hour or a couple hours during the trading day. So as you can see here, AUD USD is bullish on the daily. And so, I'm sorry, it's bearish, meaning that you can see that sellers are in control of the market. And so it is very bearish. All right. Now, yesterday, we saw a lot of activity with the Australian pairs, and this huge wick happened yesterday. And so I'm keeping in mind of what's going on in the market with coronavirus and all the different fundamentals that we have going on. And fortunately, those things are some impact on our trade, but it can be positive if we know which way to trade them. So on this chart, I'm knowing that I'm overall bearish, and I know that we had this major rejection here and prices now approaching this reversal zone. So I have these zones marked because on the daily, I like to see where my strong reversal areas are, my strong levels that I want to watch and potentially trade from. So when you turn your chart to a line chart, it doesn't always take into account the wicks, but I usually will adjust that once I see what price action has done. So I'm always readjusting my support and resistance. So if I go here and I turn this to a line chart, I'm always paying attention that where price is right now. So currently price is here, but earlier it was approaching up here. So I'm looking at, okay, possibly where is it going? And I'm looking at these turning points in the market here, which are reversal areas. Also these areas here where you see these swings. If I turn it back to a candles chart, you'll see that it matches up very nicely with the zones that I have marked here. So when I give you a price and I say potential KiSS trade between 66.55 and 66.60, it's saying that that could be a potentially good area to execute from, but not 100% certain, but you should know that it shouldn't be too far away from that area because that's what I'm looking at. So if you understand the strategy, then you would know that. The problem is that with scalping, things happen so swiftly that I don't have time to type tons of details and messages inside of Telegram. I'm trying to quickly give you a signal, and you should know exactly what I'm potentially looking at. So if you notice here, price actually came to this area. And this last candle here, you can see that price actually rejected off of that zone there, okay? So as price approached it again, I'm also looking at the possibility of it rejecting in that area, but I'm also looking at where's the next zone up? Where's the next major reversal zone up? Also seeing that price is still respecting my trend line resistance, all right? And so when I see that I have this area of potential reversal, and price has already pushed a significant number of pips to the upside, I know that I'm going to potentially see some reaction because we sell off of strong resistance areas and we buy off of strong support. So seeing that, I then drop down to, now even though I'm bearish on the daily, well, when you drop down to the 1 hour, you're going to see something different. So on the 1 hour at the time, now all of this didn't exist. So on the 1 hour at the time, we were seeing this uptrend here to the upside. Okay, that's what we were seeing. So it was like that. All of those red candles didn't exist. So I'm looking at that, and a lot of you will see that I create X's on my chart. It's really where I'm just kind of trapping price. And if I even got rid of this, you guys know I love channels for beginning traders. And if you simply created a channel, you will see that if you trap price in this channel, you would simply see that you have some nice confirmations going on. So yes, you are in an uptrend, and ideally we'd like to trade with the trend. However, that's not where price was. Price was at the top of the channel, and it was in a major reversal zone. And as you can see, price is vectoring off of this area, rejecting. Okay, price rejection, wicks, they tell us a story. You know, I always say that. And so when we see that, and then we also match this up with the KiSS confirmations, I go to my 5-minute time frame, and as I can see here on the 5-minute, look what we have here, a beautiful confirmation. And so if I were to just highlight this, remember, if you go to the manual and you see exactly what our confirmations are for KiSS, we want to see that the last, if we're selling, we want to see a green candle, preferably 1 or 2 outside of the Bollinger Band. The stronger these candles are outside of the band, the better. We then had our RSI come way above the 80 level, reverse down. We have a beautiful stochastic crossover. The MACD is usually the last to come together. But once I see this, and I already see this, I'm more focused on price action on a naked chart, okay? I'm not really paying attention to indicators. I'm first looking at where are my major reversal areas and what is the market doing? What is price doing at this time? And based on what I'm seeing here, and I see this rejection in this zone here, I know this is a major turning point in the market, plus price has already pushed a significant number of pips to the upside. My bias has started to become bearish also too, because overall on the daily, I know that we're still bearish. So I then look for my 5-minute confirmation. Once that 5-minute confirmation happens, and you can see that, you can look in the manual, then go to the 15-minute. The 15-minute will then start to line up. Once you have a 5-minute confirmation, you don't need to go back to it. You simply look for the 15-minute to play out, and you look for the same thing. Look at this beautiful, strong green candle coming outside of the Bollinger Band. You then have another candle that formed. This was actually a pullback, so you actually would have profited right here had you entered. Even if some of you probably entered at 66.55, you might have had some drawdown. Maybe you held the trade, and you were, let's say, it pushed 21 pips up, okay? So I'm going to show you how to manage that, because there are 2 different things you can do in terms of your risk options, and I know people kind of get confused on that. So I actually executed down here. I was able to enter again and take some profit, and I actually entered again on the pullback. Entered 2 positions, still had 1 position running because I forgot to set my TP and stop loss. Yes, that was a huge mistake on my part. But thankfully it went my way. And so as you can see on the 15-minute, everything lined up beautifully. You want a strong RSI. Preferably, I like my RSI to be over the 80 level and start to point down. But I'm getting in up here. I'm not waiting for all of this to come together. What I want to see is all of these indicators coming together per our rules. But I'm, remember, focusing on this. What am I seeing here? And what is my bias based off of what I'm seeing? After I'm seeing this, I'm adding multiple confirmations to it with the KiSS confirmations. So we had a beautiful confirmation here, beautiful RSI, your crossover of your stochastic, your red signal crossing over your blue signal line, and finally, the MACD is always the last to come together. I don't wait for the MACD to come together. I more so use the MACD as an exit strategy, sometimes entry as well, but exit because once the MACD starts to cross, that is a confirmation in the change direction of trend. So that can give you confirmation that you can hold the trade to the next zone if you wanted to. So let me just kind of show you how this trade ended up, and I'll show you also in our Telegram. If you're not in this Telegram, you'll want to make sure that you join and follow along. So when I drop a KiSS trade, I usually will put in Telegram potential KiSS trade idea AUD/USD, and I'll put either if it's a short or a long for buy or sell, and not always, but sometimes I'll put the zone that I'm looking at. So this time I put around 66.55 to 60. Now, that's not always accurate, but what you should know is that if Kenya says that, let me go to the chart and see what potentially she's looking at. So if you go to the chart, and I always provide a recap so that you can actually see what I'm seeing or what we saw together and why this trade went our way. So as you can see, sometimes I use channels, a lot of the times I use channels, and a lot of times I just trap price, and you guys will get familiar with my charting. But I have this channel here. I also put the KiSS confirmations to show the multiple confirmation behind it and how the trade played out. And I do this so that you can get used to seeing the setups, and you can get familiar with the pattern. Now, this was a different trade. I don't always provide my profit, but I like to be transparent with losses and with my entries, and I like to show you how I'm executing. So as you can see on this first position, I actually had a position before this that I was able to get in and get a couple pips, and then I entered again. However, huge mistake on my part. I didn't put a stop loss or a TP for this one, but I did for this one. I was rushing into a meeting for our academy, and once I finished our meeting, I realized that I still had this position running when I expected for it to had already taken profit. Talking about freaking out. I was freaked out, but so happy to see that this profit was, this trade was in profit. So I profited $155 on this trade. However, it could have went totally opposite, which is why we have to be so diligent in planning our risk and making sure that we don't have any distractions when we're trading. So huge lesson for myself today, and something that I'm noting in my trading journal. And I'm just sharing that because all of us make mistakes, no matter how good you become in your trading, where you arrive. We're never masters. I consider us all to be forever learners of this skill. And so you just have to remember things like that. But thankfully, it turned out in my favor. So I say all that to say that I hope that you find this helpful. I do want to point out one thing, and I want to talk about risk management, because a lot of people are not great at it. And I think that it's so important for us to go over risk management. So let me just point out some things that you want to keep in mind when you're managing your risk, and we'll talk about it. All right. So in the manual, I talk about some potential options for risk. So your risk plan is, you have two options. You can use a tight stop loss, or you can use a wider stop loss and lower your lot size. So for example, if your max lot size is $3, or let's say $2, you might use a $2 lot size. But let's say if you got in early at 66.54, and you know that price could potentially push to the next zone up, which would be here, this next zone up. However, based on your account size, you might not be able to stand that. You might have to cut a loss sooner. Now, if my balance is bigger than or larger than yours, if I have a larger account than you do, then my risk plan might be a little bit different. I may be able to risk 2%, whereas you're only able to risk 1%. So what I do, for example, my total risk for today was $468.46. So let me just type that really quickly. My total risk was $468.46. And this is 2% of my total account. So how I like to do it, I take my total account balance and I calculate 2% of my total account balance. And this is my daily max risk. Okay. Then I plan out my lot size and say, based on my risk, how much can I take on? How many positions can I actually leverage in the market? And if I think this trade is going to go my way, now when we're scalping, we're using larger lot sizes typically because we're getting a lot of profits in a small amount of time. Now you can use lower lot sizes, which I encourage. But with scalpers, typically how we take advantage is when we have a strategy that has an edge, we typically use higher lot sizes to take advantage of the volatility in the market. So what I like to do, instead of using a humongous lot size and using my max lot size, I break it up. So for myself, for example, I used a $2 lot size here with the expectation that if price pushed to this zone here, I would enter a second position, which I did. Now, if I did that, for example, if let's say my entry was 66.57, so 66.57. And let's say from here, let me just measure. So 66.57, and let's say price pushed 24 pips. Okay. So I had a $2 lot size, and that's times 24. That's $48 that I have in drawdown. Now I'm still far away from my total risk of $468.46. So normally what I do is I have my risk plan out to where I might say on this position, I only want to risk. Usually I try to make sure that if I'm going to do two positions, then I want, like, for example, if I'm going to set a second position here at 68.82, I'm definitely not going to take a loss on my first position here because that just wouldn't make sense. So instead, I always set my stop loss away from structure, And so, for example, if I'm thinking that price will potentially come here or this zone and turn around, I'm going to set my total stop away from here. And yes, I'd be willing to risk, probably $200 for the fact that I could make either that or more on two positions. So that's how I like to do it. But what you're going to do is you're going to find you have leverage and advantage when you're not using your max lot size and you give yourself room to execute in the market. So hopefully that makes sense. But you either have the option of taking a very tight stop loss, or you can lower your lot size and widen your stop loss. So if I don't use my max lot size, like let's say if I'm not using a $8 a pip or $10 a pip, I can lower that into fractional lot sizes and I can widen my stop loss. But the higher your lot size, the lower your stop loss should be. So that is how you want to manage your risk. Again, we have a lot of clarification around this inside of the Academy, but I just want to show you how price actually matches up. When you see these turning points and when price hits these reversal areas, you have a nice rejection there. And then you combine that with KiSS confirmation and you go straight into profit. It's a beautiful thing. And when the trade doesn't play out, then you know that it becomes invalid. And when you need to cut your losses, it's as simple as that, guys. So I hope you found this helpful. Comment on this video if you have any questions. Be sure to join our Telegram. The link is in the description of this video if you're watching from YouTube. Also, information on how to join our Academy. God bless, and I'll see you in the next training.